Okay, so we're going to go ahead and get started. We want to welcome you. My name is Jennifer Young, and I'm with University Credit Union, and I'll be your presenter today. We're going to be specifically talking about construction loans. But before we get started, I'm just going to cover some just housekeeping items. If you have any questions throughout the presentation, I'd encourage you to go ahead and type those questions in on the question bar. And periodically through the presentation, I'll pause or stop and answer those questions. So anything you have a question on, just go ahead and type that in. Second, if you have any questions that perhaps we don't get to or things that we don't cover in the presentation today, I just encourage you, on the screen you can see the mortgage department at 801-481-8840. That number reaches our mortgage consultants directly. So anytime you call that number, it rings directly at the desk of all of our mortgage consultants. And so you're assured to get somebody that can help you with your question. Let's see. I think that's about all the housekeeping. So we're just going to dive right in and we're going to talk about construction loans. What we're going to cover today is what is a construction loan and when is it necessary for you to need a construction loan, and what are the types of construction loans that are offered. So first off, a construction loan is a loan that is provided to you that builds a home from ground level up. It's supposed to cover the course of construction. This would be the type of loan that you would need if you are building a custom home. Now, a lot of times people will ask us if you need a construction loan if you're buying a home from some of the bigger builders in town, so like Ivory Homes or Destination Homes or D.R. Horton, those big construction lenders, and those big builders. And those, you don't have to be concerned with providing your own construction loan on those types of properties. They already provide those for you. So what we're talking about is we're talking about a custom home that you are looking at building on a piece of property that you've found separately, and you want to combine that property with a home of your dreams and build that together, and then you would need the construction loan to get that accomplished. And that's what we're talking about. We offer at University Credit Union, we offer two types of construction loans. We offer a one-time close and a two-time close, and I'm just going to give you an overview of each one of them to give you an idea of what that is. A one-time close, you close on the construction and the long-term loan prior to beginning construction. So you do a one-time close. The interest rate on the long-term loan is actually locked up front, and you pay one set of closing costs. And so there isn't two different, you go through the course of construction. When it's done, we do a modification that just modifies that construction loan over to the long-term, and you're off and running. So that's one-time close. Again, you close on the construction and the long-term prior to the beginning of construction. Your rate is locked up front and you pay one set of costs. Now on the two-time close, you close on the construction loan prior to the beginning of construction. Now you'll hear me refer to that prior to the beginning of construction. That's a key point. We want to make sure that you're not doing anything prior to the start of construction. Nothing. No dirt can be moved. Not even go out and dig around with a shovel. It's really important, and I'll explain that a little bit later in the presentation. But on the two-time close, again, you close on the construction loan prior to the beginning of construction, and then you build the home. The long-term loan is not closed on until the home is 100% complete. So once the home is done and everything is complete, you have your certificate of occupancy, then you would close on the long-term loan. And your long-term loan is actually not locked. The interest rate on that isn't locked until the home is about 30 days from completion. We really don't want to go any longer than that. There are some unforeseen delays that come along, and so we really limit it 30 days prior to the home being 100% complete is the longest that we'll lock out. And then we actually give you a credit of 0.5% towards your long-term closing costs. We realize that that seems like a lot to have two set of fees, and so we want to help you with those costs, and so we always credit back 0.5% towards those closing costs. So again, you close on your construction loan prior to the beginning of construction. You close on the long term when the home's complete. The interest rate isn't locked until 30 days from the home's completion, and we give you a credit of 0.5% towards the long-term closing costs. Now, construction loans are, we will do up to a 12-month build term on construction loans, and we'll actually consider a little bit longer if you're looking at building a property that is significantly larger. So if you're building a property that's going to be, $1.5 million, $2 million, and you're big and the square footage is big, we know that those take a little bit longer to build. And so on a case-by-case basis, we'll consider going a little bit longer than 12 months. But on average, we offer a 6-month, 9-month, or 12-month build terms. The interest rates on the construction loans are very low, and you actually just pay interest-only payments during the course of construction. And this applies whether you do the one-time close or the two-time close. So if you do a one-time close, again, interest only, two-time close, interest only through the course of construction. It doesn't matter on that, whichever the term. And we'll actually bill you, and you'll receive a billing that says this is how much you owe on the interest. The interest accrues on the funds as they're drawn. And so you don't have to pay interest on the full amount. Let me just give you an example. If you do a construction loan for $400,000 and the very first draw that's done advances $35,000, you're only going to be paying interest on for the first month on that $35,000, not on the full $400,000. Halfway through the construction, you may have only advanced $150,000, and that's what interest is going to be charged. You're going to be paying interest on that amount, not on your full loan amount. So you're really not paying interest on the full loan amount until all of those funds are advanced, and really by then you're probably close to being ready to roll that over to the long-term financing. Again, the 6-month, 9-month, and 12-month bill terms, and we will go up to 95% of loan to value or loan to cost, whichever is most limiting. Now, loan to value obviously is whatever the value of the property appraisal value comes in at, and the cost is what the actual hard costs of the property, and that would include the land plus the cost to build the home. That cost or the loan to value, 95%, whichever is the most limiting. We do offer loan amounts up to $2.5 million. And again, the little asterisk, we do go a little bit higher than that on a case-by-case basis. If it gets over $2.5 million, typically what we need to do is we'll consider going into our commercial loan department. But we do have the ability to handle those. So if it's over $2.5 million, don't be worried. We do consider those, and we will look at those options. And we do offer construction loans for primary residences as well as secondary homes. We do not offer construction financing for investment properties, so we maintain this for our primary residence and secondary homes members. This just gives you a case by case, sorry, I'm stammering. Just a comparison between the one-time and the two-time. Again, the one-time, you close once, you lock in the long-term rate up front. The loan amounts are restricted to county loan limits, and what that means, just to give you an idea, Salt Lake County, we're limited to $600,300, and all of the other counties in Utah, except for Tooele and Summit County, are $453,100. I know it's going to be confusing. If you're in Salt Lake County, just know you can go up to $600,300. If you're up in Davis, $453,100, and if you're in Summit County, it's $679,650, and Tooele is the same as Salt Lake, $600,300. Anyway, it just gives you an idea of the one-time loan limit. So on a one-time, if you're going to be in a jumbo category, so if you're going to be over that $600,300 mark, you're going to fall into what's called a jumbo category, and you would have to go to the two-time close. So if you look at the two-time close, you're going to close twice. You're going to close once on the construction loan, and when the home's complete, you'll roll that over to the long-term loan. You'll lock in the long-term rate when the home is complete. So about 30 days from completion is the maximum out that we'll do. Loan amounts can exceed county loan limits. So this is, again, if you're going to be in a jumbo category, you can go up to the $2.5 million and a little bit higher on case-by-case basis. As we've indicated, loan amounts over $2.5 million, we would probably push you into our commercial lending department. So there is an option for you, just in case you're curious. So we really want you to be prepared for what to anticipate in the process of construction. So I'm going to hurry and take you through just a few things that we require so that you'll be prepared for that process. We require that you have a general contractor involved with the transaction. We don't offer an owner-builder situation with our construction loans. We do require that there's a general contractor. I do have, from time to time, we do have questions come up that somebody that is in the construction industry wants to go ahead and build their own home. And we will look at those on a case-by-case basis, but I will tell you, as a general rule of thumb, we do not offer owner builders. And so if you've had experience and you want to do it and you come into us and talk to us, we'll really encourage you to go ahead and have a contract with a general contractor. There are a lot of reasons that we do that, mainly for the risk reason. We do feel like having a general contractor is a better risk for us. We are a little bit more protected because of the insurance that they're required to carry and the licensing. And so we do require that a general contractor is involved in that. If you don't have a general contractor and you're interested, reach out to us and let us help you through the process, because we do have a list of general contractors that we've worked with in the past, and we would love an opportunity to share our experience with them and maybe help you through that process of finding a general contractor. The next thing is we're going to be gathering information from you as well as the builders involved. We're going to gather the same information for the builder that we gather from you. This is the same process that you would go through if you're buying an existing home. We're going to require income information, asset information, and then in addition to that, we're going to require information on the construction. So we're going to ask you to provide us with a cost breakdown, a set of plans. We're going to ask your builder to give us a copy of their license. We're going to get insurance information. We're going to do some research with the state construction registry and make sure that they're in a good standing with the state construction registry. You'll hear me refer to that a lot. We call it the SCR, State Construction Registry. The SCR is a unique thing to Utah, and it's a great opportunity to protect both buyer and builder and subcontractors and suppliers that work on these properties. It's an added level of insurance for all of parties that are involved in construction to make sure that everybody gets paid for services rendered. So just know that this process does require a lot of documentation to be provided, and so we're going to be asking for a lot of things from both you and the builder, and it's really important for you to know that up front, and also to be able to prepare your builder to know that we're going to ask for the information. We're going to underwrite them the same to make sure that they're really good and stable and can do that and perform for you the way that we want them to. We will issue, once we get information provided to us, we'll issue a preliminary loan approval, and this just tells us that we've evaluated the information and we feel comfortable with the information that's been presented, and we're ready to move forward. And in that preliminary loan approval, it'll address any additional things that may be required or needed to issue the final approval. During the process, we'll order an appraisal and title work, and these are a little bit unique in a construction loan. The appraisal is actually done subject to completion. This is why we need a really good breakdown, a cost breakdown, and a contract from the builder that addresses the kind of finishes that you're going to be dealing with in the home. We want to make sure that you're getting full dollar value for the finishes that you've chosen in your home. And so if you're choosing to go with solid surface countertops and upgraded flooring and upgraded cabinets, we want to know those things so that we're giving you full value when the appraiser goes out and does subject to appraisal. And title, likewise, title is going to be doing a little bit more investigation than is typical on an existing home. They're actually going to be researching with the state construction registry to make sure that there are no prior lien rights that are being affected. So nobody's already started on the property. They haven't there hasn't been things like lumber and cabinets and things like that that are already ordered that the suppliers may have done a pre-lien on the property. They're going to check all those things out and make sure that you're in a first place position and that everything is really good and secure. So there's a little bit more that goes into it for a construction loan, a little bit more than what's an existing home. The final loan approval is issued once we have all of that information back in. So once we've received the appraisal and the title and we've received all of your information and all of the information from the builder, we'll go ahead and issue a final loan approval. And really at the final loan approval, it's really at a point where we're ready to go ahead and finish up and get this closed so that you can start construction. And then at that point, you go to the title company and you sign your closing documents. Now, once you go to the title company and sign your closing documents, it typically takes on a construction loan, it typically takes about 2 to 3 days before they actually give us the clear that they're ready for construction to start. What has to happen during these 2 to 3 days is the title company actually records the deed of trust, but before they record the deed of trust, they go out and they do an inspection on the property to make sure, again, that nothing has happened on the property, no dirt has been moved, no work has been started, and then they also do a last prior to recording check with the state construction registry to make sure that everything is clear and ready to go. And once they get that clearance, then they go ahead and record the deed of trust in a first place position for us, and they give us the clearance that construction is ready to start. And then you're ready to go ahead and go. Now, through the course of construction, you're going to be turning in requests for payment. And requests for payments are called draws. Draws are handled by our loan administration department, and you will just really enjoy working with this group of people. They do a great job, and they handle the disbursement of the funds on the construction loan. So typically what we do is we set you on a draw schedule where you're going to be turning in a draw on a monthly basis. When a draw is turned in, when a request for payment or a draw is turned in, that request goes in, and then an inspection is done on the property to make sure that the things that are being requested payment have been completed on the home. The way that a construction loan works is it's actually that things that are paid after they're completed. So it's not like you can turn in a request and say, we want a request for the cement work, and there's been no cement work done. There are occasions where you have to put deposits down. You'll have to put a deposit for lumber and a deposit for, pretty much every industry that's represented in the construction likes to have a deposit up front. And we understand that, and you can advance for deposits, but we really want to make sure that we're staying within balance on the construction loan, the amount that's been dispersed, the amount of the home that's complete. And so we want to make sure that if you're drawing out 25% on the construction loan, that 25% of the home is completed, and so on. And so what we'll do is we usually try and get you on a draw on a monthly basis, and we'll do an inspection on a monthly basis. And just making sure that everything is staying within balance on, again, the amount of funds that are being withdrawn on the construction loan, the home is being completed to that stage. And also if there are any stumbling blocks that come up, if there are any problems that come up or any things that come up, we want to make sure that you keep the loan administration department involved in that. And when you close, you get all the contact people and all the contact numbers. And when in doubt, if you ever run into problems, you can always reach out to any of your mortgage consultants and make sure that we can help you through any of those questions. So once you get all of the things finished on the home and it's 100% complete and you've gotten what's called a certificate of occupancy from the city, you're ready to go ahead and convert over to your long-term loan. So if you've done a one-time close, then you would only have a few documents that would need to be signed that would convert you over. And if you do a two-time close, at this point, this is when we're going to start looking into interest rates. We're going to start wrapping things up on making sure all the final draws have been handed in and that there are no unfinished claims against the construction itself, any unpaid people. And we're going to go ahead and update credit. We're going to update all the original information that we got and get everything wrapped up for the long-term loan. So you can see that there are a few more things that need to be done on a two-time close. And so we usually start the process of starting the long-term close on a two-time. We usually start that process about 30 days out to make sure that we have that all ready so that when your home is complete, we're ready and we don't have any delays on that. So Travis, you have a question. What about getting roads cut into the property that can be done before the construction loan is started? That's a really good question. Travis, if they are private roads and it will impact the construction loan and the ability to insure us in a first place position, then they might have to wait. But I will tell you that's a unique thing If it's a private shared road, it may not impact us as much because it would impact all of the lots that are affected. That's a really good question, and those are things that might have to be handled before we start construction. The title company, it's a little bit more advanced question, but the title company may have to do what's called an indemnity agreement and indemnify the people that work on the building of those roads and cutting in those roads. And that is something that can be done. It's just something that the title company has to be notified of, and you get them involved a little bit ahead of the process to make sure that they can indemnify and ensure that those people are going to be paid, but it won't affect the lien position. I know that sounds confusing, but that's a really good question. And you know what, Travis, you're welcome to reach out to us directly, and I can go into a little bit more details to help you through that. Thank you, that's a good question. So after you've converted everything over and you've got your construction loan done, you've rolled it all over to the long-term loan, you're off and running on your payments. But I just want to cover with you a few things, some do's and don'ts in the process. Do always check with your mortgage consultant and make sure you keep them informed of any changes going on throughout the course of construction, anything that changes. It's really important. Keep in touch with the builder during the construction process. I kind of laugh when I say this because I can't imagine somebody building a custom home and not keeping in touch with the builder. I have built 3 homes, and I will tell you, I was out on the job site almost every single day. And I'm sure my builder wished that I would not keep in such good touch, but I can't imagine anybody building a custom home and not staying in touch. And lastly, contact your mortgage consultant with any questions. If you run into something that is just not sitting right with you and you feel confused or you're upset about something, reach out to your mortgage consultants. Let us help you through the process. Let us help you understand and work through if there's any issues going up with your builder, if there's any issues with any of the subcontractors. Keep us informed and let us help you through the process. This is what we're here for, and that's what you're coming to us for. We want to do not only the loan, but we want to help you through the process and make sure that this is an enjoyable process. I'm going to pause for just a minute. We have one more question. Tom, you have a question. Does this apply for major home improvement projects? Yes, this is a great option. And when you talk major home improvements, I'm going to carry that just a step further and tell you, typically this isn't for somebody that's finishing a basement. I would not say that finishing a basement is a major home improvement project. We've got a great line of second mortgages or home equity line of credits that will help you with things like that. What I'm talking about is if you're going to be doing a significant adjustment to your home's floor plan or the square footage of your home, increasing the square footage of your home and doing a complete update. There's a fine line between a major home and the costs that are involved with that. And if you're just updating some things, if you're updating windows and if you're updating doors and things like that, those sometimes fall in the category of significant improvements, but not a major home. And so really just call us and talk to us about the different, we'll give you some options and see what works best for you. Our job is to give you options. Your job is to choose what works best, because in the end, you really do know which is best for you. We have one other question. Joseph asks, we are considering building a new garage with an accessory dwelling unit above it, legal in Salt Lake City. We'd rent the apartment to help pay for the structure. Is there a loan product for us? It's a really good question, Joseph. A construction loan is going to be a good option. A home equity line is also going to be a really good option. The biggest issue that you're going to run into is it depends on what the overall impact of value that it's going to bring to your property. If you're talking about that it's going to cost you just $150,000 and it's only going to increase the overall value of your property $50,000. If you have additional value in your property right now, equity in your home that might offset that, it may be best for you to do just a cash out refinance, or it might be better for you to do a construction loan. Again, this comes into the category of talk to us, call us, give us some ideas of what you're looking at as far as cost. Let us look at what your current equity position is, and let us see what works the best for you? That's a really good question. And that's a lot more advanced question, but Jelza, thank you. I appreciate you for asking that. I'm going to continue on to the don'ts. We've covered the do's, and here's the don'ts. Please, 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 please don't start construction on your property until your construction loan is in place. It is so important not to start anything because it will delay your construction and it could stop your construction. There are a lot of people that have started construction before, and there are liens to the point where the title company just simply cannot insure a first place position because of all the lien rights that have been broken. And so it's really important that you don't start construction. Do not incur any new debt or increase your current debt through your construction loan. This one's a tough one. This one's really hard because, you know, all of us love the Home Depot and Lowe's and going in there and they go, you should have a Home Depot card and put it on here and you can get 6 months no interest and 6 months no. It is so tempting, but it is really, really important that you don't incur any new debt or increase your debt through construction. The reason for this is it can affect your overall qualifying. The most important thing that you could do before anything happens like that is call your mortgage consultant and tell them you're looking at opening an account with so-and-so and increasing your debt by this much. Is that going to affect your qualifying? The more that you keep us involved, the more the overall process is going to go smooth. And that's what our goal is, to have you have a good experience and enjoy this experience of building a custom home and not having anything that creeps up and affects it. Don't have any change to your income. I've had a lot of people that through the course of construction have gotten opportunities to get new jobs. If this comes up, again, reach out to us, let us know, let us help you through the process, and if it's something that's going to affect your qualifying, then we'll advise you of that, and if it's not, then we'll congratulate you and have you go ahead with it. But the more you, again, the more you keep us involved, the better. Another don't deviate from the plans and costs that were submitted for approval. I've had a situation where we've had members come to us and say, oh, by the way, we changed that room and we decided that we didn't need it, and so we just went ahead and didn't worry about it. Or we decided that we didn't want to finish the basement after all, and so, by the way, we changed that, so we used the other funds for something else. And it affected the overall value of the home. When the appraiser comes out and does an appraisal, he does it subject to completion, the way that it was submitted. And if anything changes, that can change the overall value of the property. It doesn't mean you can't deviate, but just keep us involved. If you do have a significant change or a change to the original plans and costs, let us know, let us go to the appraiser, let us get it approved and give you the impact of what that's going to do, so that it doesn't impact your overall qualifying and your ability to finish this home and roll it over to the long-term financing. That's our goal, is to get you through this process and make sure that everything finishes up in a good way for you, that this is a good experience. So there are a lot of other questions. We're going to go through just a few more questions, and I would encourage you, if you have any other questions, go ahead and type those in. Those have been some really good ones. One of the questions that came up was, can you build on a multi-acre parcel and then subdivide the parcel after? You know, that is a really good question too. The answer is no. We really want you, if you're going to be subdividing the property, you really need to have that taken care of prior to the start of construction. It's easier to do it prior to the start of construction, especially with the cities that have to get involved with dividing those off. If you don't do that, what happens is it makes it a lot more difficult for the city and the lender to do any kind of releases and redraw property lines. It's very difficult at that point. So the answer is, if you're going to be dividing it later, we will not allow that. Do it up front, come to us with the parcel that you've finalized, and let us go ahead and move forward from there. One question that we get often is credit scores. What's the minimum credit score? We do adhere to Fannie Mae requirements, and Fannie Mae's requirement is the minimum credit score for a construction loan would be 620. Jumbo loans, if you're going to be in a jumbo category, so anything, again, a reminder, anything over 600,300, your minimum credit score is 700, and we will only consider on a case-by-case as if it's lower than that. I can tell you that we're really cautious when it comes to jumbo loans, and if you're going to be under that 700 FICO, we really want some really good compensating factors of what is going on. Let us help you through seeing what's going on with your credit, what's causing that. Is there anything that we can go ahead and help get that increased and raised up for you? Travis, you have a question. Is there any option for adding the purchase of the property as part of the construction? Absolutely. So I'm going to make sure that I understand what you're asking. And I'm assuming that you're asking, are you asking if you can purchase the land as part of the construction loan? So put the two transactions, so we would purchase the land and then go ahead and start construction all in one. Thank you, Travis, for the clarity. Yes, that's what you're asking. So for those that aren't familiar, I think I'm mind reading Travis here, but for those of you that aren't following, if you find a piece of property that's listed for sale and you hurry and put together a cost breakdown and a set of plans and you want to close all at once, paying off the seller of the land and start construction, yes, absolutely, we can do that. And your first draw would be to pay off the land and then go ahead and what other fees, that would be your first draw. So yes, we absolutely can do that. It doesn't change the amount that you have to have invested in. You still have to have the bare minimum of 5% into it. And so if you've got money saved and you were going to be doing maybe a lot loan, which brings me to the lot loans, the next thing. We do offer, if you have a seller that is not willing to wait for you to put together a set of plans and a cost breakdown and find a builder and do all of that, and you need to close on that land, we do offer lot loans. Our lot loans, we do 70% of the purchase price we will finance. You are required to have a 30% down payment. And we do that on, the payments are actually figured on a 15-year loan, and we do have a 2-year call on those. We really, on our lot loans, we really want those to be a temporary loan. We don't want those to be a long-term loan. So we do, again, payments figured on 15 years with a 2-year call on it. We give you that 2 years to hopefully get everything together. Find your builder, get a set of plans together, put a cost breakdown together, and get everything ready so that it gives you that option in case you find a piece of property again that the seller isn't willing to wait for you. So that was a really good question. Thanks, Travis. There was a question that came up, do we have to have a builder, do we have to use a builder that's on your approved list? And the answer is no. We don't require that you have one that's specifically on our list. But what we do ask, again, like I mentioned earlier, we do ask that you provide, that you prepare your builder that we're going to ask for information just the same as what we're asking for you. So we're going to ask the builder to provide us with financials, with tax returns. We're going to have them sign a credit authorization. We're going to require to see their insurance and make sure that they have a really good, that their license is in good standing. We want to make sure that they're in a good position and that our job is to look out for your best interest through this. And so we really make sure that the builder is really well screened. And if they meet all that, then we're going to put them on our list and refer them to other people that maybe are looking for builders. So we don't require that they're originally on our list, but we do require them to play along and provide all of the information for us. One of the questions, how long does it take for the construction loan to be put in place? That's a good question. Typically, we require that you give us about 6 weeks to 8 weeks. It doesn't always take that long, but sometimes it does. It depends on how willing to work the builder is, how willing to provide us information, how thorough everything is. If we had somebody walk in today and had a cost breakdown, a set of plans and everything ready to go, we could have you, ready to go in 30 days, maybe 4 to 5 weeks. It takes some time to get the title work done and the SCR checked and all of those things. So it usually takes about, if I set the expectation at 4 to 6 weeks, that's realistic. If there are some unforeseen delays, it may take a little bit longer, but 4 to 6 weeks should be sufficient. So that's a really good question. Let's see. So what if, one of the questions, what if I run into costs, what if the costs are more than what we originally planned for? Okay, so that's a really good question. We get this a lot. Help, the costs are more. We set aside, you know, $2,500 for flooring and our flooring is going to cost us $5,000. We run into that a lot, and that's why it's really important to get those cost estimates up front. When you do a cost estimate, when you do a good faith, or I mean a cost breakdown, we're going to require on the cost breakdown that you carry a 5% contingency. We want to make sure that in case there are some surprises in the costs, that you are prepared as a buyer, that you're prepared. We want to make sure that you don't have those surprises. And so we require a 5% contingency, and that's required on the hard cost of the home. So if the hard cost of the home is going to be $350,000, 5% of that additionally we're going to put aside as a cost as the contingency, and we're pretty protective of that contingency. We're not going to allow that contingency to be used as just, hey, I changed my mind and this is what I want to do. If you change your mind over the original setup, the original costs, then we're going to require that you pay those out of pocket. If you've got a reasonable amount set up and you've got, we run into this a lot for appliances. If you've set aside for appliances $3,500 and you go in and you find a $3,500 fridge that's just knocking your socks off and you go, you know what, I don't care, I'm going to get it because I want this $3,500 fridge. And all of a sudden you realize that you've blown your budget and you still need a stove and a microwave and, you know, a dishwasher. We're going to require that you pay for those things. Any of those upgrades, any of those unforeseen expenses, we want to cover in the contingency. But in upgrades that you're choosing, we're going to require that you pay those out of pocket. And so it's really going to, that's why we really counsel with you up front to make sure that you really set aside things, you really are prepared and you're setting it up the way that you want, so that hopefully there aren't any unforeseen surprises throughout the course of construction. We just really want you to be prepared and we want you to have a good overall experience. And again, that's the goal with this. We want to make sure that you're having a good experience and that you are excited about this property and excited about this home, and that it doesn't end up being a bad thing. So let's see. There is one question that we had from another webinar that I'm going to bring into this. The question was, what if they wanted to buy a home that is under construction? Would they need to get a construction loan for that? And from time to time, you drive around and you see a property that's under construction, and you won't have to worry at that point for doing a construction loan on that. Typically, the construction loan is already in place and whoever is building it has already provided that. So you wouldn't be required to provide a construction loan. The home would need to be finished. But if you find a home that's under construction, call the builder or contact. Don't be afraid to go on that job site and ask around, who would I contact if I'm interested in this property? Most of them will be able to give you that information and share that information. And then we would love to help you with the long-term financing on that. But you wouldn't need to worry about a construction loan if a home is under construction. Typically, that's already in place. So those are really good questions. That really, if there's other questions, I'll give you a few more minutes to type those in. But really, that's the end of the presentation. I just want to remind you, y'all know how to find us because you're here at the webinar. So you can always go to our website and find our contact information there. Or again, just a reminder, the mortgage department, 801-481-8840 it rings directly again at any of our mortgage consultants. Just a reminder, my name is Jennifer Young, and I'm actually the sales manager of the team. And so if you do have questions, we really would love an opportunity to help you. We're pretty passionate about construction loans. We really love doing them. We enjoy working with our members, and this is a great service that the credit union, again, we're a full service credit union, so this is a great opportunity to work with us and see. These are some of the fun loans. They're a high risk loan, but we really enjoy working with our members and doing these. So we look forward to working with you, building a custom home. This is the fun part for me. I love construction. If you do run into any other questions, reach out to us, but I think we're going to go ahead and wrap it up. Thank you so much for attending, and thank you so much for your participation and the questions that you asked. Those are really good questions, and we appreciate it very much. You guys enjoy the rest of your day. Thank you.